What if everything you've been told about building wealth on social media is a lie? Forget algorithms, follower counts, and viral posts. The true billionaires of our time are operating in plain sight, yet completely unseen. Today, we're about to expose the secret blueprint of an invisible empire where fortunes are quietly amassed, not publicly displayed. You scroll through your feed and see them everywhere. Influencers in private jets, entrepreneurs with flashy cars, and gurus promising financial freedom if you just follow their 7-step formula. It's a dazzling spectacle, a performance of success. But here is the uncomfortable truth. Most of the wealth you see online is just that, a performance. It's often built on debt, sponsored posts, and the constant pressure to maintain an image. It's a fragile house of cards, beautiful but unsustainable. Now imagine a different world. A world where fortunes far greater than those you see online are built in total silence. This is the world of the quiet majority, the truly wealthy who operate entirely off the radar. These are the individuals who understand that real power isn't in what you show, but in what you own. They've mastered a paradigm shift that most people miss. Discretion isn't just about privacy. It's a superpower in wealth building. While everyone else is chasing likes, they're busy acquiring assets. So, how do they do it? Let's pull back the curtain and explore the pillars of these unseen fortunes. The first pillar is deep value investing mastery. This isn't about chasing hot stocks or cryptocurrencies that are trending on Twitter. It's the exact opposite. It's about finding treasure where no one else is looking. Think of it like this. While everyone is crowding around a brightly lit popular attraction, the deep value investor is in a forgotten corner, digging up a diamond that everyone else walked past. They analyze businesses and assets that are fundamentally sound but are currently undervalued or completely overlooked by the market. They might invest in a solid, old-school manufacturing company that isn't sexy enough for the headlines, or buy into a market that's temporarily out of favor. They buy when there's fear and pessimism, and they hold with unshakable patience. Their returns don't come from a sudden viral spike. They compound quietly, powerfully over years, sometimes decades. It's a game of patience and deep research, not hype and speed. The result? Immense returns generated without a single bit of fanfare. Next, let's talk about the private equity playbook. This is where the ultra-wealthy don't just invest in businesses, they buy them, entirely. But you'll never hear about it on the news. Away from the glare of public markets and quarterly earnings reports, they acquire struggling or stagnant companies and get to work. They bring in new management, streamline operations, and invest capital to fuel growth, all behind closed doors. They are not worried about a bad quarter affecting their stock price because there is no public stock price. They have the freedom to make tough, long-term decisions that a public company CEO, under pressure from shareholders, simply couldn't. After transforming the business over several years, they might sell it to a larger corporation or even take it public, reaping massive profits. This entire process, from acquisition to transformation to sale, happens in private, far from public scrutiny. It's a masterclass in creating value in the shadows. The third pillar is one of the oldest and most reliable: real estate. But we're not talking about flipping houses on a reality TV show. We're talking about real estate's quiet giants. These investors operate with incredible stealth. They build relationships with brokers, city planners, and other insiders to get access to off-market deals, properties that are never publicly listed. They might quietly assemble multiple adjacent plots of land over several years, a strategy known as assemblage, to create a massive development opportunity that no one else saw coming. They might invest in commercial properties like warehouses or data centers, the boring but essential infrastructure of our digital economy. Their strategy isn't about quick flips. It's about acquiring high-yield properties that generate steady cash flow and appreciate in value over the long term. Their portfolios are built brick by brick, deal by quiet deal, creating a foundation of wealth that's as solid as concrete. So how do these quiet fortunes actually grow? It's all about strategic accumulation, and it starts with leveraging relationships over reach. The typical social media influencer is obsessed with their reach. How many millions of people see their content? The invisible wealthy, however, are focused on the depth of their relationships. Their power comes from a small, tight-knit private network of trusted advisors, fellow investors, lawyers, and bankers. This inner circle is their real gold mine. It's where they get access to exclusive off-market investment opportunities that you and I will never see advertised. A trusted contact might tip them off about a family-owned business looking for a silent partner or an undervalued commercial property before it ever hits the market. These relationships, built on years of trust and mutual benefit, are worth infinitely more than 1 million followers. Then there's the magic of compounding in the dark. When you're constantly showing off your wins online, there's a pressure to spend. You have to maintain the image, buy the next luxury item, and fund the next extravagant trip. The quiet wealthy face none of that pressure. They can reinvest every single dollar of profit back into their ventures without anyone knowing. This creates a powerful, accelerating flywheel of wealth. Their money makes money, and that money makes even more money, all compounding silently, year after year. It's the eighth wonder of the world, as Einstein called it, but practiced in total privacy. There's no need for external validation or a flex for Instagram, which allows their capital to work for them with maximum efficiency. Finally, they master the art of negotiation and acquisition. The biggest deals, the ones that create generational wealth, rarely happen in a public bidding war. They are crafted in quiet boardrooms through meticulous negotiation and strategy. The quiet wealthy are masters of this art. They understand leverage, timing, and human psychology. They know how to structure deals that are a win-win, but that ultimately give them the upper hand. Because they operate in stealth, they can often acquire assets without alerting competitors and driving up the price. They control the narrative because there is no public narrative. The deals that make them fortunes are the ones that never, ever hit the news cycle. So why is all this silence, this discretion, so powerful? We can call it the discretion dividend. First and foremost, a low profile protects assets and privacy. When the world doesn't know what you have, it can't come after it. This shields wealth from frivolous lawsuits, unwanted media attention, and public scrutiny. You're not a target. Your financial decisions aren't picked apart by commentators or social media mobs. This privacy is not just a preference, it's a strategic defense mechanism for preserving wealth. Second, it provides freedom from public expectations. A public-facing CEO or influencer is a prisoner to short-term results. They have to please shareholders every quarter or feed the algorithm every day. This leads to short-sighted decisions. The private investor has the ultimate luxury, time. They can make strategic, long-term decisions without worrying about public opinion or a temporary dip in performance. They can invest in a project that will take 10 years to mature, something that would be impossible in the public eye. This freedom is perhaps their greatest competitive advantage. And that leads to the ultimate edge, moving stealthily while competitors are distracted. While other businesses and investors are busy building their brands, posting content, and analyzing their social media vanity metrics, the quiet wealthy are making moves. They are acquiring assets, negotiating deals, and building their empires completely undetected. By the time the world notices, the game is already over. They've already won. They operate on a different battlefield, one that their competitors don't even know exists. So, what does this mean for you? You might not be buying multi-million-dollar companies tomorrow, but the mindset is scalable. You can start your own path to quiet riches. The first step is to adopt a discretion-first mindset. Shift your focus from looking wealthy to actually building wealth. Stop worrying about what others think of your financial journey. Your goals are your own. Celebrate your wins privately and learn from your losses without public shame. Next, start identifying opportunities for private investments, even at a smaller scale. This could mean investing in a friend's small business, joining a local real estate investment group, or seeking out assets that aren't hyped up in the mainstream media. Look for value where others see boredom. Read, research, and build your own small network of trusted, financially savvy people you can learn from and collaborate with. And most importantly, commit to the long game. Building real, sustainable wealth is a marathon, not a sprint. It doesn't require a single social media post, a viral video, or public validation. It requires discipline, patience, and the quiet confidence to build your future in private. Let your net worth, not your follower count, be the true measure of your success. The quiet path is not the most glamorous, but it is the most powerful. Thank you for watching. If this video shifted your perspective on wealth, be sure to subscribe and hit that notification bell for more content that challenges the conventional wisdom. See you in the next one.